Chapter 17, Refund, Amount Owed, and Third-Party Designee. The following forms and publications are used in the research and development of this lesson. Forms and publications are available at www.irs.gov. The objectives for this lesson is to understand how refunds are paid and by when. The student will learn the various ways a balance due can be paid and by when it must be paid. What does a third-party designee do for a taxpayer? And how to file for payments when the full balance due cannot be paid at once. Form 1040 lines 74A through 74D indicate an overpayment of current year taxes and how the taxpayer would like to receive it. The two options are check and or direct deposit. Now, direct deposit will be rejected. We are referring to electronically filing and or could be mailed in, but the direct deposit will be rejected if the numbers or the letters are whited out on a mailed-in form, or the names and the account numbers don't match the bank records. Also, a joint return must be deposited in a joint account. That is up to the banks. I have had clients tell me that a joint tax refund did get deposited correctly in only one of the taxpayer's bank accounts. Other banks have shown me and told me no, that they won't accept it. If the refund is in the name of both husband and spouse, then normally it must be deposited in a joint account. But again, that's up to the banks, and I have seen all kinds of variations to that. Also, a 2012 tax return was filed after December 31, 2013, the direct deposit will reject. The amount owed. All taxes must be paid by April 15th to avoid interest and or penalties. Now, that date can vary from year to year depending on exactly when April 15th falls on, but for the most part, April 15th is correct, and it is for 2013. IRS does accept credit cards, checks, and electronic funds withdrawal from a bank account. To pay by credit card can result in an additional fee. Also, bounce checks have a penalty of $25 or 2% of the check, whichever is more. If the taxpayer cannot pay the full amount, they should request payments or an extension of time to pay. We always get those who want to file an extension because they owe. And when I remind them that the extension is only an extension to file, not to pay, in most cases they're not interested in filing that extension then, because they know they're still going to have to pay or pay additional interest and or penalties. Now, if you do have a balance due, Form 1040V for voucher is a statement sent with a check or money order for any balance due. If the return is filed electronically, the voucher and payment are mailed separately and must be postmarked by April 15, 2013 for the 2012 tax returns to not incur interest and penalties. Most tax preparation software will generate the 1040V automatically. Now again, if you know you have a balance due and you cannot pay it in full by April 15th, then Form 9465 is a good way to go, and it's an installment agreement request. And that's important to understand. It's just not an automatic thing. Obviously, the IRS will grant most requests, but the taxpayer owes more than can be paid at one time. The forms ask permission to pay in monthly installments. You can determine the amount of each payment and when you want it to become due. That helps you to mix it in with your other payments and based on, of course, when you get paid. The IRS charges a late payment penalty of 0.25% per month on the unpaid balance. If the return was not filed on time, the late payment penalty is 0.5% per month. And there can be a combination thereof of late filing fee and, of course, late payment. If the IRS approves the request, a user fee of $105 is charged to set up the account, or $52 if you're having it automatically withdrawn from a bank account. If the taxpayer elects to use the installment agreement, interest and a late payment penalty will still apply on the tax not paid by the due date. Taxpayer also agrees to meet all future tax liabilities, and if they do not have adequate withholding going forward, they will be considered in default of the agreement. Many times you'll have clients that the advice I give them is you need to increase your withholding. Everything else remaining the same, you have a balance due this year of say $1,000, and you need to increase how much is being withheld from your checks. This way, the following year, you won't have a balance due again. And this is exactly what it's stating here. If they are on an installment loan agreement, then they must, later years, continue to pay their balance due, or they will be considered in default if they have, again, not enough or an inadequate withholding amount. Taxpayer is considered to be in good standing with the IRS even under an installment loan agreement, provided they make their monthly payments on time. Now, there is generally you're not able to qualify for this, but there is an extensions of time to pay. If paying the tax when due would cause the taxpayer an undue hardship, and that is defined by the IRS, not by you, they can ask for an extension of time to pay. Filing Form 1127 by April 15th of 2013 for the 2012 tax year. An extension is generally not granted for more than 6 months, and they will still pay interest, but penalties will not be assessed until after the extension runs out. There are instances where a person may be out of the country for an extended period of time, causing a delay in being able to file and pay. The next line on the 1040 is the third-party designee. If a taxpayer chooses to have their tax preparer, friend, family member, or any other person they want to discuss their 2012 tax return with the IRS, they need to check the Yes box in the section titled Third-Party Designee. The taxpayer is authorizing the designee to allow the IRS to call the designee with any questions, allow the designee to give any missing information, allow the designee to call the IRS on the status of any refunds, not allowing the designee to receive the refund check, and it's not allowing the designee to represent them before the IRS. But basic information, if it's missing, it has been a challenge as a tax preparer to call the IRS and discuss a return, even if I am been selected with the designee being the third-party designee. But that is an issue with the particular person you're talking to at the IRS at that moment. That completes Chapter 17. Be sure to go online for review questions and TPAs. You must pass with a 70% or better, and be sure to read Chapter 18. Thank you.